What's up, everybody? Welcome to CRL Chart Request Live. I'm Spencer Israel, normally with JC Peretz, but today I got the man, Steve Strazza. Mr. Strazza, how we doing?
I'm doing okay. How are you doing?
We're fired up today because we're in a bull market, so we're all in a good mood. But we're not here to talk about bull markets and bear markets. We're here to talk about individual charts. That's the point of the show. I already see a few requests in there because I did say, because last week, if you were watching us, we ran out of time. So sorry about that. I did say if you wanted to get your chart discussed on the show, get here early. A few people have done that. We'll get to those questions. But before we do that, Steve, I know you had a couple of tickers on your mind. I'm not really sure what you wanted to say about them, but you specifically asked that we talk about Delta Airlines and MP Materials. I'm not sure why, but I assume you do.
All right. Yeah. So airlines are catching a lot of buzz these days, and here's why. I'm going to zoom into this chart. This is Delta up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Is that like 14, 15 straight up days for Delta? Can we run this, Alfonso? Because that's probably a new record. There has been a really relentless bid in airline stocks. So they're getting talked about a lot. I'm going to flip this to a daily. I'm sorry, to a weekly chart. And this is just math. I'm not breaking the scales to do this, right? So I just drew a Fibonacci from when Delta went bankrupt back after the financial crisis. And that's what happens, right? So buyers beware. So I'm drawing a nice fib here, long-term fib, and then I'm going to zoom in. I'm going to draw another fib. And think about this, right? The first fib, the 261 here, price overshot it a little bit. And then the 100% here, price overshot it a little bit. So when we draw the fib from the COVID crisis, look at that. Look how it measures up, Spencer. You see that? And
No, well, I mean, yes, I see it, but what's
I
the
mean,
point you're trying to make?
the 161.8 here.
Okay, that guy. So that's critical.
Yeah. Yeah, of course. That's the same as the 38%. And that's just math, right? All right. Let's zoom out and play a thought experiment, right? So we've anchored the first fibs from the key high and key low back during the financial crisis. What if I made these shorter term fibs line up with those financial crisis highs and lows? Like, what if I did that?
I don't know. Man, these Fibonacci numbers, they are magic.
They line up in almost the exact same place, right? And it's just math. That's how it works. Like if we overshoot a fib in one direction, you could draw the retracement in another direction. And that's just how it works. Okay. So we want to pay so much attention to these levels. When you look at something like Delta Airlines right now, I'm going to leave this fib level here. But at the same time, let's drill in now to the daily chart. So this is really it for me. And if you want to buy an airline stock right now, it better be a leader because this is an industry group that has always kind of suffered and underperformed. And the reason I'm saying Delta is for the simple fact, if we look at Delta relative to the NYSE ARCA airline index, which is a lot better than Jets.
I was going to ask you.
Yeah, forget Jets. So this is just the NYSE index for airlines. If we zoom out on this, I'm going to flip it to a weekly chart. Like this is your leader, right? So if you really want to express a bullish thesis on the airline industry right now, you buy the best stock, period. And this is that, right? So Delta in a primary uptrend, versus its peer group, Delta, in the best uptrend on an absolute basis. If you really have to get long airline stocks here, Delta is your name. And that was the moral of the story.
All right. What about MP? You specifically, which is not a stock that I have thought about it for a while.
Yeah. Here it is. Spencer, you know what we do here. Is this a chart that we want to be buying or selling?
Wait, what does inverted mean? I mean, I know what it means, but what does it mean in this context?
What does inverted mean? Just tell me. Is this a chart that you want to buy or sell?
We buy the smiles and we sell the frownies.
And
This
what
looks
is it? It's a
this looks
smile.
this looks smiley.
Big smile. This is inverted, right? Because some people, there's a bias here. And I am this way. I'm a happy person. I'm a bull market person. I like it when stocks are moving higher. I like it when asset prices are moving higher. I like it when the world is doing well, right? I like it when the global economy is in an expansionary phase. I want to look at basis. I want to look at bullish patterns. So I've taken the top in MP materials and I've inverted it because that's how I view the world. And when I look at this chart, I say, wow, I would be buying this, no doubt about it, every time. Let me uninvert this chart.
I was going to say, that's not what I thought the MP chart looked like.
So that's what we're really looking at.
That's what it looks like. Yep.
Where the RSI. If you're unsure about shorting stocks, flip them upside down, right? Because for us, like this is such a great exercise. This looks like all of the stocks that we want to be buying, just upside down. So if you run a long short theme, or that's your strategy, this is a great, this is a really good option for something to short right now. It's completed this topping formation. You can trade this little bearish continuation pattern to the downside, right at a very clearly defined level. Call it like $23, and that's it. This one looks like everything we want to be buying, just upside down. So if you're looking for something to short, that's it.
All right.
Simple as that.
That was a nice lesson there, Strazza. But we got to get to the chat because the show is chart request live. Request being the key word there. We have a few tickers in there. Let's start with Troy, IRDM Iridium. This is a telco, I believe. I think telecommunications. Yeah.
Yeah. I get it. I do. I really think T-Mobile is the move in this space. So we got an 8 billion market cap here. Pretty crappy dividend. Yeah, listen.
Hey, the chart speaks for itself, does it not?
Right. You don't argue with a trend like this, right? So here's how I would draw something like this. It's a little bit shaky, so I want to put a line chart on there because the focus is always on closing prices. And there you go. This one is just stair stepping higher, and you have your level right here. Call it 64, right? And let's zoom in now on the 64 level because we know that's a key fib level. And let's draw a real like flag or pennant here, right? So I'll draw right through that. And that's really it. That's how you want to play this, right? So when we zoom out, we have targets and pivot levels, right? And then we have this bullish continuation pattern happening right at a key level of interest. If this thing breaks out, you want to buy the pivot highs called $66 and run it back all the way to 100. So that's a nice trade. It's a third there.
All right. Verona Pharma, ticker VRNA. This is a almost $2 billion British pharmaceutical company. They are working on drugs to treat COPD and cystic fibrosis.
All right. So small cap space here. Look, you want to bet. Yeah, you want to bet on the best biotech stocks right now. This looks like it might be one of them. Again, going with closing prices. And that's where we are, right? So you have this bullish continuation pattern taking shape at the upper bounds of a monster base breakout level, right? So look at this pennant here. $21 is that level. I would say you got the pivot highs here at like 23.50. Call it 24 for confirmation. We get to 24 on this, we're going to 32. And that would be about 33% move. So that's really, I think that's a great trade. And this is the kind of base that we want to be buying, right? So let me just, right? Downtrend, sideways trend, base breakout, new uptrend, first bullish continuation pattern on that new uptrend. I think you easily see 32 from this stock in the near future.
All right. That's I assuming that that's what you were looking for. Who asked that in the chat? H Chan. By the way, it is helpful if you're gonna ask about a ticker, if you want to say, I'm looking to buy, I'm looking to sell, I'm looking for an entry, an exit, I'm long, short, bullish, bearish, whatever. Any of that.
Spencer, but I won't give a shit about that, right? If you're looking to buy something, I will happily tell you that.
Yeah, no, I know, but it's helpful context. So, for example, Jonathan, who's asking, can you please update Ethereum and Bitcoin? We can certainly do that. But I'm curious, Jonathan, are you asking about an update because you are long and strong, or you want to buy and you're looking for validation? I'm just curious.
This is it. It's really simple for me. I already have the chart marked up. Last time Bitcoin completed a bearish top, it was not a top at all. This was March, right? We had pivot lows in February. We had pivot highs in late February. And then we broke in early March. And all this was a really nice launch pad for the next leg higher that brought us from 20 to 30. Right? So we caught 50% easy in a month or two there. And now we have another top, and look at it again. It looks really sketchy. It looks kind of scary. But does this fail is the question, right? And we have this line in blue here. This is the long-term trend reminding us that the primary trend is now higher. So reversal patterns like this are more likely to fail than complete. So do we hook higher here, right? And enter a situation like we were in March, where there was a ton of bad news. We just shut down Silvergate and Signature. And Spencer, I know you have contrary opinions on that, which I would love to explore, right? We closed the on and off ramps for crypto. Now we're closing the brokerages and the exchanges for crypto. Is this something similar where we had bad news spark a rally, bad news and a failed breakdown spark a rally, and now we have more bad news and a failed breakdown spark another rally? I really am leaning in that direction, and I'm thinking higher Bitcoin. In fact, I'm thinking 100,000 in Bitcoin by year end.
Just for context here, that blue, what moving average is that?
200 day.
200. Okay.
That's it. That's the long-term trend. And can I just tell you like how helpful it has been for me in my process to keep this 200-day moving average on my charts recently? I used to be the guy who would like talk crap about the 200-day moving average. Like, you don't need it. Like, if you have higher highs and higher lows, you know the trend is higher. The 200-day is clearly turning up. When you really need and want the 200-day is during sideways trends. And that's what we've been in for the past year now, right? We've been in this base building environment. And
Yeah.
you really want to drop the long-term moving average onto your charts in that environment, because it just tells you, like, I thought John made some great points on the morning show this morning, right? Where he talked about those August highs from last year. And he basically said, like, momentum wasn't ready. The trend wasn't ready to break out then. And a really good, signal that would support what John was saying back then, because, like, that would have been a V-shaped bottom if we bottomed in the summer of last year and ripped higher through those August highs, right? The best piece of evidence that you could have looked at to say, no, we're too soon here was the 200 day. In everything, last August, the 200 day was sloping lower. If you look at it today, it's curled higher, right? And all that's telling you is that these bases or these rounding bottom or these reversal patterns have had time to kind of build a nice launch pad, right? You don't want to buy a V-shaped bottom. Sure, it could happen. Look at Meta. But it's not the higher probability outcome.
Mm-hmm.
Give these trends time to base, build a nice bottom, build a launch pad for a new uptrend. And that's what's happening now because the 200-day has gone from sloping downward to curling, flattening, and sloping upward. And that's important.
Jonathan said he's long and strong from lower levels. Me too, Jonathan. I checked my Bitcoin wallet on Coinbase for the first time, I don't know, in like 8 months over the weekend. I was surprised to know that I'm up. I had no idea. So that was fun.
I hold on. Let's just stop right there. I continue to be a buyer against 25. Like this is really the level. Like, yeah, let's just do this thing. Right. So this is really the true level for Bitcoin. You have this nasty downtrend. You have the sideways trend, right? You see that 200-day downward sloping, flattening, curling higher. Now it's telling us the trend is higher. You got a breakout here above these August pivot highs and these year-to-date pivot highs. And now this is just a classic retest. So for long-term Bitcoin buyers, the trend is now higher. The path of least resistance is up. And 25 is a very clear level to accumulate at. And that's where we are right now, right? So as much as we could zoom in and say, ooh, this is an ugly top on tactical terms, when you zoom out, it's a great bottom and a classic retest. So I think the current level is a great entry for long-term Bitcoin holders and crypto believers.
All right, let's see if we can speed this up here because we got a bunch flying. Let's look at LLY, Eli Lilly, which is a word I can't really say all that well.
Yeah,
For Joe.
it's a beautiful stock, right? So here's all I have to say about Eli Lilly. Just get in. Know that the getting is good. Like we could draw a fib right here. This is how you would do that. Okay. And you got the test here, the correction, and then we ripped. So maybe call it 375. Now we're right in the middle of the range, right? So you're not going to find like a good place to define your risk just here on this show for something like Eli Lilly. But what you should know is that with a stock like Eli Lilly, let's just chart it against the broader market. And I'm going to zoom way out to 1993. This is the kind of trend you want to be in, right? So since 2018 now, straight up. This is a secular leader in biotech and healthcare. This is probably the best stock that you could own in healthcare. And it's been that way for 5 years now. It'll end eventually. But until it does, this is a good place to put your bets on.
All right, I'm trying to find what I think are the most interesting charts here. Let's look at CR. No, let's not do that. Actually, we already did one for Joe. What about
Charles
right?
River?
What? No, no,
Sarah?
no, 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 no. No, it wasn't that. Let's. You know what? We'll stay. Let's just stay here and let's look at Amgen.
Yeah. Yeah. No.
No.
There's just better opportunities. It looks really toppy. As good as Merck looks, right? Something like this, it's kind of sloppy. I don't like trend lines, but I could draw one, right? And look at what we're doing. You always want to look at a closing basis for a trend line, right? You got one touch, two touches, fine. Look, the trend is turning here. Really, the 200-day tells me that more than anything. Not going to feel overly bullish on a stock like this. This is a topping pattern. And there are other stocks in the healthcare industry that I would much rather be in than something like Amgen right now.
Some
Like that.
Somebody asked about Aries, ARES. I'm 90% sure we talked about that on last week's show.
I like this a lot. We've been long. We're still long. We're staying long.
All right. I have an interesting one here. After you're done with that, here's a good one.
No, this stock is absolutely killer, right? So came public in 2014, built out a nice base, ripped higher from it, just continues to hit its price targets and consolidate constructively. Now we're breaking out again above those late 2021 highs at the 685.4 Fibonacci extension. That measures us up to the 1109, 86 to 134. I mean, this is an industry leader. It's a strong stock. This is the kind of stock we want to be buying in this environment.
And yes, Wally, I'm going out of order just because we got a lot of tickers here. What about Roku?
Yeah,
This is a interesting chart.
listen, it's getting there, but again,
Rounding bottom?
I encourage people to go read our post from yesterday, right? This one doesn't check all the boxes, right? The 200-day moving average still sloping lower, telling me that this base could very well require more time. We'll draw it like that. Give you a little whoop-de-hoo here. What an ugly arc. But yeah, I mean, that's a rounding bottom. But again, look at the 200-day, still sloping lower, telling us this one might need more time. If I were to put an RSI 14 on this, it is overbought right now. Wow, this thing's ripping. Another 2.5% today.
Tech
Look,
stocks, man.
so here's the thing. Like I've been telling people, you could jump your entries in this market just because as more and more bases break out, we have to lean in the direction that other bases that have not broke out will break out, right? So I would have told you something like Roku, you could jump this last week. You could buy it and anticipate a base breakout. But at the end of the day, this one doesn't have all the characteristics that we're looking for in terms of relative strength, primary trend turning higher, and a bullish momentum regime. It's just not quite there yet. Yes, we do have a very nice overbought reading. This is now the second one of this year, but we got oversold in late December of last year. So there are better bases out there. If you have to own Roku, you own it above 75 with, man, wherever you want to take profits is up to you.
I'll just say I had a Roku TV and it sucked. Okay, what about?
Dude, it's terrible. It's really bad, and that's important to keep in mind. Like, heard my comments on streaming. Like, these are failing businesses. So you
No, no, no. Roku's business is different. It's a hardware play. But anyway, FM.
Spencer, if all
What?
the stocks in your group are working, you can't say it's fundamentals that are driving your stock higher, right?
True,
Like
true.
you see like broad sympathy bids in a way sometimes where Netflix is hot, Disney is hot, and then these other stocks get bought up just because they're a part of the group, right? And that doesn't necessarily speak to like positive fundamentals. It just
You're right.
it speaks to a bull market. So you have to be careful.
You're very right that the businesses between Roku and Netflix are markedly different, but the Wall Street treats them as peers, so we have to treat them as peers. What about FMX, Fomento Economico Mexicano? It's a Mexican beverage
It's a
company.
maker in Mexico. This is like the Mexican Coke.
Yeah, it is.
Just look at how clean this is. Like you got to buy this all day, every day. What's the dividend on this, Spencer? I'll check if you don't.
Oh, let me see. I'm seeing
Big, right? It's big.
I'm seeing 1.8%.
Yeah, so that's exactly where we want it, right? A dividend bigger than that would be sketchy.
Red flag.
That's where I want my dividends. Let's flip this to a line chart. It's a little bit gappy. Look, the idea here is that you have a very clear line of polarity. And frankly, it measures right up at a key psychological level. I'll call this 100. If you're above 100 in FMX, you got to be a buyer. You'll get a nice yield. And frankly, what was it? 1.8, 1.5?
1
It's
point.
lower
Yeah,
than
what I say?
yield.
1.8.
If anything is higher than the average market yield, you want to ask yourself a question: why is that? Right? the best stocks and the best companies offer a below market dividend, and that's because they're growing. And you want that growth, but you also want that yield, right? So if you're getting more than like 2% in today's market, you want to ask yourself why. Am I investing in commercial real estate? Like, why am I getting more than 2%? Am I investing in energy? You always get more than 2% there, right? But something like this, the dividend is perfectly in line. The stock is growing steadily. It's a staple. They sell soft drinks, right? They sell sugar water. That's fine. But look at this base. We have a very clear level, call it 100, a psychological level. What a nice shelf of former highs here. And we can play it back to the all-time highs at 125. Look, if you're going to collect 20% in a consumer staples name, that's a nice trade because you're going to get paid along the way, and it's a safe trade, right? Your downside is very limited always in these names. I like this a lot as participation broadens outside of the U.S. I think you want to be in some of the biggest and safest names, and this is one of them.
There we go. There's a bunch more here in the chat we don't have time for. Also, just as a general rule, we do show a bias to stocks that are either above $1 billion in market cap and or have longer histories, right? So somebody asked about a recent SPAC. Not a ton of history there, right? So
Spencer, like if you want to come on and request stocks, like keep it to the bigger boys. Don't come on here and ask for like penny stocks. Like we will make exceptions. I'll talk about like a $500 million biotech, right, Spencer? But we'll have to disclaim that.
yeah.
The reason why we do that is because a lot of our clients do deal in size and they can't transact in names below a certain liquidity threshold. So that's the reason for that.
And also just, from a technical perspective, if you're going to, ask about a ticker with, a month, sorry, a year of history, right? A year and a half of history, there's just not a ton to go off of there, right? So
also, if you're asking about a very illiquid stock, like from a technician's perspective, if the stock chart is gappy, right, and full of like volume spikes, we don't trust it. It's hard to do technical analysis on a thinner market, right? So when you move into the micro cap or the penny stock space, you have much thinner markets. The reason why technical analysis works is because we know that there is supply and demand or buyers and sellers at these levels, right? If you are going to give me a stock that's very thinly traded, I can only know so much about the supply and demand at those levels because there aren't enough buyers and sellers.
Yep. All right, that'll be a good place for us to wrap it up today. We'll be back on CRL on Thursday. The show airs Tuesdays and Thursdays at 1 p.m. Eastern time. That's going to be a wrap for the show and actually a wrap for the channel today. We'll be back tomorrow morning on the morning show. We've got Mike Lee. It's going to be a good one. As always, follow us everywhere. Follow Steve on Twitter at Strazza. Follow me. I'm at SJ Israel. Follow us at the handles are all in there. They're in the description. Just, click on it from there. If you have not subscribed to our channel on YouTube, you definitely should. You'll get notified every time we go live. I do it. He does it. You should do it. It's easy. Drop us a like. We'd appreciate that. The likes really do help. It seems silly, but the reason that people ask for likes is because YouTube likes when videos are liked. So if you give us a like, more people will find the video, and we'd appreciate that. Thanks everyone in the chat. The participation is why we do this show, right? The show only exists for us to talk to you. So thank you to everyone. Thank you, Wavy McFly. I appreciate that comment in the chat very much. He says he shares our stuff all the time. We appreciate that. Okay. Any final thoughts, Strazza? If not, I'll head out.
It's a bull market. Look to buy the best bases. That's it.
Boom. Mic drop. See ya.